Hi, my name is Khan and welcome to the new chapter. In this chapter, we are going to learn that how we can identify inducement and what is the inducement and how it works. And main thing is here that how we can identify inducement on chart. In a smart money concept, inducement is a main part. If you mark correct inducement, then very highly chances you can get very good entry for the buy and sell. Because smart money concept and candle range theory, it all depend on inducement. Without inducement, you can't enter in a market. You can't set your stop loss, take profit, everything. That's why this part is a very important for you. In this case, we can say that market momentum is a bearish right here. So if market momentum is a bearish, either market momentum is a bullish, you need to follow both situation is here. First is here that if market momentum is a bearish, so market generally creating lower lows in a downside. So when market momentum is a downside and break the recent high, that's called inducement. Look at this one. In this case, if market momentum is a bearish and continue pushing downside, at this point, what happened here? Market break the previous recent high, that's called inducement. Why this is inducement and why we are marking as an inducement? You need to understand what is the inducement. Inducement is a specific area when people get stop loss or enter in a market for the buy and sell. That's why an specific area which induce to people for the buy and sell in a specific area. Same thing happening after taking out the inducement. What happened here? People get entry here for the breakout and they are looking for the entry for the buy. If you mark this line as this one as a trend line here, so generally what we are expecting here, we are expecting that if market break out this trend line and people get enter here for the buy. And second thing is here that if anybody sell here, for example, this one is our area and this is our resistance zone. You are looking here for the sell at this point right here. So where is your stop loss? Probably we put our stop loss recent high and low. So this is our stop loss and the entry will be as per the plan. So this is our entry and this is our stop loss. So what happened in this case? On this demand zone, if this one is a tap here and we are looking for the sell and put the stop loss just of the recent high. In this case, what happened here exactly? As you know, market push downside and again what happened here? Market break out the previous high because everyone put the stop loss on recent high and low. That's why what happened here after taking out the inducement, market push downside. So this area, this point become our inducement when people get enter for the buy and sell and also putting the stop loss. Again, if anybody buy here on a breakout like this trend line is broken and they are looking for the buy at this point right here on the breakout. So if you are buying here, then you are also putting the stop loss just above the low. So these are a specific area when people get enter for the buy and sell, they put the stop loss and they all liquidity grab here, then market push downside as per the plan. So this is all about inducement, that how market inducement work and why it's important for you. Again, what happened here? Market pushing downside right here. We can see here market break the structure, again break the structure. At this point, what happened here? Market again creating lower lows here. When market creating lower lows, market should be break the first high here, and this high can be break in a first attempt and can be multiple attempt. This it doesn't matter. Main thing is here to taken out the inducement. So once market taken out this high is here, this act like a inducement. It means when market broke it, we can expect this one is an inducement taken out because everyone looking for the same situation here. This one is our supply zone here, and people looking for the enter here, pullback, and they are expecting market push downside. Again they are looking for the entry right here, for example here, and put the stop loss just off the high and target here. So what happened here in this case? Market hit our stop loss because everyone putting the stop loss just off the high. And same thing here, that market looking for the breakout structure here like this one and people get enter here, they also create the liquidity. That's why this point become our inducement. People get induced at this point, everyone for buying and selling at this point, and they putting the stop loss, they enter at this point. That's why this point become our inducement. Again, what happened here? Market again break the structure in a downside right here. This one is our structure is a broken here, and before this one we can say how times market break the low is here and again low is here, and this process will be continue as I did here in this case right here. So this is our bearish structure when we can identify the inducement two times here, and this is the exact definition that how we can identify inducement. And one more thing is here that if market broke this one, for example here, this inducement taken out, so if price close of it or sweep it or just break it, it doesn't matter. In both situations, this one is a become a valid. It doesn't matter this price should be close of it, then become valid. No, if price just sweep it, we can consider this one is a valid. So in both situations, we can consider this one is a valid if market broke the previous recent high is here. Now switch back in a bullish structure here. In a bullish market, how it works? Similar process will be in a bullish market. We can say that if market momentum is a bullish and continue going higher high is here like this one and like this one. So what happen here in this case, market break the recent low is here. In a bullish market, when market break the recent low, we can consider them as a bullish inducement. So this one is our bullish inducement is here. Again, what happened here? Market again break the high and high is here. Market creating higher high is here. At this point, what happened here? Same thing happening here. Market taken out the inducement, and after taking out the inducement, what we are looking? We are looking for the continuation to the upside. But in this case, I'm just teaching you that how we can identify inducement and how it look like and how we can spot on chart. So this is our inducement, and this inducement can be first attempt, and later what happened, market take one more pullback and then go higher. It doesn't matter. Main thing is here to taken out the inducement is here. Once market taken out the inducement, we are expecting that market can go higher and maybe looking for the reversal. But this one is our inducement. Market momentum is a bullish and taking out the previous low, that's called the inducement. Again creating higher high is here like this one. At this point, what happened here? Market break the low is here. And what is this one? This is a called also inducement right here. So these two are inducement happen here. Even three inducement create at this point right here. So this is an inducement because everyone looking for the buy after break the previous high is here. Means this one is our demand zone here like this one breakout, and people looking for the buy, they're putting the stop loss just below it. And same thing happening here. If market momentum is a bullish and marking this trend line is here, once market broke this trend line and people looking for the sell, it means at this point everyone looking for the buy and they creating the induce, they creating liquidity and induce, and market induce to people for the buy and sell. So you need to buy and sell after grab the liquidity after taking out the inducement, so we can enter for the buy and sell when you will get high probability entry for the buy. So I hope you understand that how we can spot our inducement in a bullish market. The process will be similar as I told you in a bearish market. So this is a process exactly that how we can identify the inducement in a bearish market, in a bullish market. Now let me show you on chart that you can easily identify, spot the inducement on a real chart, which will be more helpful to you. In this bullish structure, we can see that market creating higher high is here and continuing price going upside. But when market taken out the inducement, then market push higher aggressively to the upside. In this case, we need to understand what is the pullback, and then if you identify the pullback, then you can easily identify the inducement. In this case, we can see here, if I start from bottom of the structure, look at this one. Price creating higher high is here, again creating higher high is here, and later what happened here? Market break this low is here. And what happened here? What is this one? This is a called inducement right here. So this is our inducement. Once market taken out this one, we can consider this one as an inducement right here. Again, what happened here? Market creating higher high is here, again higher high is here, market taken out this low is here. What is this one? This one is also called inducement is here. Look at this one. This low is broken because market creating higher high is here and market taken out the inducement. Again, what happened here? Break this high is here. Look at this one. Again, market creating higher high is here at this point right here. Even one shadow is a broken, we can consider this one as a pullback is here. As I told you in a previous chapter 1, every pullback count as a valid pullback when market break the previous candle high and low. That's it. Again, what happened here? Market continue going higher high is here at this point, again creating higher high. In this case, what happened here? Creating higher high is here, again higher high. But in this case, what happened here? This low is a broken. So what we can consider this one? We can consider this one as a valid inducement right here. So these are higher high is here. Look at this one. This is a higher high is here like this one, and the previous higher high is here. Look at this one. And one more thing I want to clarify is here, if you are thinking here that if market not broke the high and why we are consider this one, we are just teaching you that how we can spot our inducement, not the structure. So in upcoming video, I will teach you exact process that how we can identify our valid major inducement and minor inducement. And also I will teach you that how we can identify our valid structure. So this video is going to be only identification of the inducement in a bullish market, in a bearish market. Later, what happened here? Market creating higher high is here and market again creating higher high is here. There is no valid pullback is a confirm here because market not close the previous candle high low is here. So both are protected here. So we are not considered this one is a valid pullback. Again continue going higher high is here right here. This one is a pullback here, and again market getting higher high is here. Again what happened here? Creating higher high and taken out the pullback is here. Once market taken out the pullback, we can consider this one as a inducement right here. So this one is our inducement is here. we can consider the previous high, previous low. Again, market start pushing higher high is there, creating higher high, but this one is a not valid pullback. So we can consider this one is a higher high is there. Again, market going higher high is there. At this point, what happened here? Market break the low. Once market break the low, we can consider this one is our inducement right here. And this point become our next high is here and next low is here. Again, market start rising to the upside. This is a higher high is here. Again, higher high is here. At this point, what happened here? Market break the low and this low act like a inducement right here. And this point become our inducement. Market again rising upside and this process will be continue until market went bullish to bearish. So this is exact process that how we can easily identify the inducement in a bullish structure. Simply you need to wait for it in a bullish market break the recent low. We can confirm that's our bullish inducement. In this case, we can say here at this point, if you are thinking why I did not mark this one as a valid inducement, because this one is not a valid pullback. To confirm any valid inducement, market should be create a valid pullback. In this case, we can say here clearly this one is not a valid pullback because the previous master candle high and low is here. Both are protected here. That's why we are not consider this one is a valid pullback. We can say here how many times market create 1, 2, 3, 4, 5, 6, 7 candle create here, but not able to break the previous candle high and low. That's why we are not considering this one as a valid pullback. So I hope everything is clear till now that how it work in a bullish market and how we can identify the inducement. If anything not able to understand, simply you can rewatch this chapter again and again before to push again on a next chapter, because every point everything is important for you. If you are not able to understand inducement, then next upcoming chapter maybe create some complexity for you. That's why I will suggest you everything is going to be clear till now, then you can move on a next chapter. Now I'm going to show you exactly that how we can identify the inducement in a bearish market and what is the process. Process will be simple. As I told you, in a bullish market, same process will be in a bearish market. When market creating lower lows, market should be break the recent high. We can consider them as a valid inducement. Let's see. In this case, we can say that market creating lower lows here and market pushing downside. So if market pushing downside, then how we can identify the inducement? Look at this one. In this case, you need to start from top of the structure. So this is our previous recent high here, which was formed at this point right here. Okay. So in this case, if market creating lower lows here and again market create one more pullback is here, because market creating lower lows here at this point become our inducement. It means when market taken out this one, we can consider them as a valid inducement right here. Why we are marking this one? Because market creating the first pullback is here and second pullback is here and market push downside, and later what happened, market taken out the inducement. That's why we are considering this one is our valid inducement and this is our bearish inducement, and we can mark them like this one. Again, what happened here? Market trying to push downside, creating lower lows here. Again, what we are expecting? We are expecting that market should be break this low is here, and when market create like this one, so where is the inducement? Simple thing is here that if market momentum is a bearish, market should be break the recent high is here. Which one is there? It means this high is our valid inducement. We can consider this one as a valid inducement right here. Again, what happened here after taking out the inducement? Simply you need to follow the same structure. Market creating lower lows, and then market taken out the previous high. We can consider them as a valid inducement. Again, what happened here? Market creating one more lower lows here like this one. This one is our first pullback is here. Again, market push downside, creating one more pullback is here, one more pullback is here, and this one is here. We can see here this one is not broke the previous candle high, so we are not considering this one as a valid inducement. It means when market taken out the previous candle high, then we can consider this one as a valid pullback, but in this case not broken this one. So simply this one is a single leg move right here. If anything happen between this one, this is called internal. Okay, so what happened here? In this case, we can see here market create a pullback is here, break the high is here, again trying to go higher, again break the high is here. It means the internal structure looks bullish here. So this low act like a inducement here. Once market taken out this one, we can consider this an inducement, but this inducement is only applicable for the bullish side, not the bearish side, because we are marking in a counter move right here. Like this one pullback, again go higher, again go higher. So this is an inducement. If market continue go higher, so we can consider that market looking for the reversal to the upside. If market not able to push higher and creating lower lows, we can shift again in a bearish structure. Same thing happening here. In this case, we can see here market pushing downside and creating again same thing. Market this low is a broken because in a first attempt not able to go higher. So this high act like a inducement right here. Again break this low, again break this low, like this one. So this high act like an inducement. Once market taken out the inducement, we can mark them as a valid inducement, and this is a bearish inducement and this is a bullish inducement. But this inducement after taking out this one, market not able to go higher, but this one as a inducement right here. But we don't need to buy here, because how to buy on a bullish market in a bearish market I will teach you in a separate upcoming chapter. You don't need to buy after just seeing the inducement. I'm just teaching you exactly that how we can identify the inducement in a bullish market, in a bearish market, and what is the complete process to identification of the valid and invalid inducement. So this is a complete process that how we can easily identify the valid and invalid inducement. Again market push downside and creating lower lows here, lower lows here, and at this point what happened here, this is our inducement right here. Once market taken out this one, we can consider this a inducement, but market not able to taken out this one. If market taken out this inducement, we can consider this one is a valid inducement. Again what happened here, market creating lower lows here, right here, again lower lows here, and this is our inducement right here. So this will become our next inducement right here, and we can consider this one is a valid inducement. Later if market continue go looking for the downside or maybe looking for the reversal, so we can trade like this one. For example here we can see a market shift into bearish to bullish. First high is a broken, again high is a broken, that means this low act like an inducement. Again market trying to go higher and higher, this one is here, market pushing downside, look at this one, again going higher high is here, like this one, higher high is here, and you have to wait for it to take out the inducement. So market again taken out the inducement right here. So this point become our next bullish inducement right here. So this process will we continue in a bullish market, in a bearish market. You need to simply follow that how we can easily identify the bullish structure and bearish structure and wait for it to taken out the previous higher low. Then we can confirm the valid inducement. Okay. So this is exact process that how we can easily identify the inducement in a bullish market, in a bearish market. Simply you need to wait for it to break them, and once market broke them, then you can consider them as a valid inducement. It doesn't matter those are closing or sweep, in a both situation this become a valid. So I hope you understand that how it work in a bullish market, in a bearish market inducement, and how it look like in a different situation. If you did not understand any key points, simply you can rewatch this chapter. This is a very important for you, and then you can move on next chapter. You can watch this chapter multiple times as much as possible to understand everything, because in upcoming chapter everything is going to be easier when you understand inducement. So in this chapter enough for the day, and for the next upcoming chapter I will teach you that how we can identify our major inducement and minor inducement and how we can spot them on a real chart. So thank you so much watching the entire chapter. I hope you learn how it work in a bullish market, in a bearish market. So watch it multiple times. So thank you so much. In this chapter enough for the day, and I will see you in the next chapter. Happy trading.